Yeah, the biggest loophole I'd say is the short-term rental loophole. That's
Hmm.
where the IRS says like, "Hey, you're not really, running an apartment. You're actually running a hotel, even if it's just like a single family Airbnb." And so what that does is allows you to not have to qualify as a real estate professional, um, to be able to unlock all the depreciation benefits of owning real estate by now operating like a hotel motel.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil. Today, I'm joined by someone I'm looking forward to chatting with, James Bohan, who is a CPA helping optimize taxes for real estate professionals and investors. And he is also an investor himself. So excited to have you here today, James.
Yeah, thanks for having me on, Michelle.
Absolutely. So let's dive in. First off, for those not familiar with you and your work yet, can you share what your main focus is these days?
Yeah. So I have a CPA practice I started about 5 or 6 years ago now, and we really focused on helping out the real estate investor community. That means both kind of your LP investors or people that just own a couple properties, all the way up to your fund managers having, 50 to $100 million in a fund, kind of everyone in between that. And we really help with both the investors and the GPs of these funds to get everything set up and structured with their entities in a way that optimizes taxes for both the investors and the GP. We also help get K1s out. That's a really busy time of the year for us right now for March, for getting all the K1s out to the investors, getting that done timely. And it's really an expertise I've built up over the past 15 years working for big firms like KPMG and working in house as a CFO for a private debt fund where we had over 1,400 LPs, did over $1 billion of loans while I was there.
Awesome. And which markets do you operate in, or do you serve the nation?
So, yeah, we serve clients nationwide. I'm seeing a lot of activity in the Southeast, also in Phoenix. And then myself personally, I moved to Coeur d'Alene, Idaho from Los Angeles 5 years ago. And I've been buying all sorts of different asset types up here in North Idaho, um, a farm, a single family rental, two duplexes, a 13-key boutique hotel. And we also bought a 26-key motel that we converted to workforce housing. So a little bit across the board. I like to say if it makes dollars, it makes sense.
Awesome. And what do you feel have been some of the main keys that have allowed your business to be able to grow and run smoothly?
I think for me, the biggest thing has been bringing on employees and bringing on personnel. It's something I was always resistant to. Starting my firm 5 or 6 years ago, I always wanted to find a way to be a one man operator. But I've really come to enjoy both the responsibilities of having employees, and then also it's really the only way to scale because just as a one man firm, you're really limited by your time. So over the past 3 or 4 years, it's really been my mission to build out a team to help make sure client deliveries are successful. Things are streamlined, and there's not everything relying on me as a bottleneck to get stuff done.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Absolutely. And as your background in both investing and taxes, what do you feel some real estate professionals and investors, like what is like the gap that you see when it comes to the way that they're maybe not utilizing all the tax advantages?
Yeah, I think when a lot of people start out in real estate investing, they hear a bunch of stuff either at a networking event or at the country club cocktail hour, and whether that's about taxes or certain legal structuring, they kind of sometimes take that as gospel and get ideas into their head. Whether it's from those in-person places or what we like to say TikTok tax advice, and there's just a lot of bad intel going out. Um, from non-professionals to kind of our um, investor and industry base. So, kind of the biggest thing we do is really coach people to let them know, like, hey, these are the actual facts. Here's how you qualify as a real estate professional. Here's how your carried interest works. Here's how all these different entities interact. Everyone here is S Corp, they hear LLC or LP. And so our jobs as CPAs and CFOs is to help coach our clients to kind of untangle the web of lies they might have heard from other people and let them know what the actual reality is so they don't, you know, do something wrong and get into trouble.
And what do you see as like some of those common web of lies that maybe get people in trouble?
Oh boy. Okay, where do I start? One is an S corp will always save you in taxes. S corps are great for kind of um operating or active income. And we do still use them in our structures, mostly for like the manager of funds. So when you're doing a syndication or you're a property manager or you're doing anything that generates fee income, you generally want to run that through an S corporation. So long as you're not in New York, not New Jersey, and you have over about 60K of net income, that's where it starts to make sense between the extra cost to do an S corp and um, the administrative burden. The other thing is when you're doing a fund is you could really separate the manager from the general partner or carried interest member. And this is something that really helps unlock the best of both worlds because with an S corporation, you generally don't want to hold real estate through an S corporation for two main reasons. One is if you ever want to move it out of it, you can trigger some built in gains tax. If you're doing some estate restructuring or doing a dynasty trust, getting stuff out of an S corp can be difficult. The other reason is an S corp will block your debt attribution basis from the underlying properties from flowing to yourself personally. So with S corporations, they have another kind of S corp basis where you're able to take losses through an S corp up to that S corp basis, but the additional debt you get allocated to you doesn't pass through to yourself personally like it would through a LLC or pure partnership. So, kind of untangling some of these webs or getting them set up right from the jump is something that I really like to help clients understand and implement so they can have the best optimized tax structure.
Yeah, definitely. That's important. What is something that you preach to all investors that maybe that like could really save them in their taxes?
I think kind of get your stuff together is the biggest thing. If you're doing, $1 million, $2 million property acquisitions, that really justifies getting a proper accounting software like a QuickBooks or a Wave, or there's a lot of new ones out there like Kick. but just do something to make sure your accounting and your books is accurate, because without that, we can't do proper tax planning. And then it leads to a huge mess, around this time of year when you're scrambling to get everything together to do your taxes. Have good systems in place. Make sure you're doing your accounting monthly, whether it's you're still bootstrapping doing it yourself or you hire an outsourced accountant. Just really make sure, your financial house is in order.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Absolutely. And when it comes to like your own investments, what have you learned that you didn't know before as just like sitting in the seat of the accountant?
Yeah, real estate requires a lot of patience, is one thing I've learned. Things often take longer than you project or expect, whether that be the renovations or waiting for a refinance to come together. Make sure you don't count on money till it's actually sitting in your bank account. I've had multiple lenders or capital partners kind of retrade me even up until like the week of closing. And so making sure you're not really 100% dependent on that happening and having backup plans is important. Also, make sure you're doing a lot of, due diligence and analysis on the front end. For example, that 13 key hotel I bought, we were going to tear it down and build something else there. But our plans changed during ownership and we had decided to add, more rooms to the assets. We went from 7 to 13 keys. And as a part of that, we realized that the sewer wasn't actually completely functioning. It looked like someone had even like stolen the copper wires from the electrical outlet to the pump station. So we had to spend about $100,000 to re-excavate, put in new pump stations, and completely fix the sewer there. So that was an expensive lesson, but overall worth it for the asset in the long run.
Yeah, absolutely. Sounds like there's all those details of what can happen in the real world of
Yeah.
owning real estate. Awesome. So, what are you most focused on solving or scaling to next for your business?
The next thing for me is onboarding a COO. I just hired a woman to start after tax season, after 415, and really working with her to further streamline all the operations, put in more employee accountability procedures, and help to take a lot things off of my plate and put it onto her plate so I can continue to focus on growing the business, meeting new clients, and working on tax strategy, which is really what I love to do.
Yeah. And what is your favorite part about the tax strategy?
My favorite part is that I really don't like the government. I don't like the way they waste our money on these wars or uh, social programs that end up just being trillions of dollars of fraud, like you saw with the Quality Learning Center in Minnesota. That's just not a Minnesota issue. They're taking federal dollars and passing it out. And so I just really don't like the way the government spends people's money. And it's always moral victories and a moral win whenever I can help my clients just, shave a couple $1,000 off or, hundreds of $1,000s off their tax bill, depending on their scale. Like every small win and big win is an overall win to me to make sure that people aren't paying into this immoral government as much as they don't have to.
Yeah, amazing. I feel that most people can agree with that.
Yeah.
So, how can someone who's in the real estate industry start to minimize the amount that they're spending on taxes?
First and foremost, you're already in the real estate game. So to me, that's probably one of the top three strategies of how to set your life up to minimize your taxes. The tax code is really set up to award real estate professionals, developers, real estate owners. So make sure you're working with a CPA to make sure you're setting yourself up in a way so you can qualify as that real estate professional.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I'll go over it, the technicalities of it really quickly. So to be a real estate professional, you need to work over 750 hours in a real estate trader business. Think developers, property managers, contractors, architects, brokers. Those are generally the real estate trades or businesses. You can't use employee hours unless you own over 5% of the business to qualify for that. So that's one threshold, and then no more time doing personal services than anything else. So, for example, myself, if I work 750 hours doing real estate stuff, but work 1,000 hours in my CPA business, I don't qualify as a real estate professional. Well, luckily for me, my wife does, because that's all she does is real estate. So that's one threshold. Two is then to unlock your depreciation or cost seg losses from your properties, you need to actually be materially participating in the rental activities. So even if you're a real estate agent, you qualify the 750 hours. If you make an LP investment into real estate that gives you like $100,000 of losses, unless you're really materially participating in that, which you probably aren't as an LP, you still can't take those losses because you have that material participation threshold. So I always like to coach people, kind of build up a portfolio of 2 to 3 to 5 assets on your own that can really justify the material participation perspective. And then you can start to make more passive investments and group all of those together, your own portfolio and the LP investments you make to meet this 500-hour safe harbor of material participation. And, this is where a lot of people kind of trip things up, or they hear something at a cocktail party, like I said, and they think, oh, I'm a real estate professional, invest in this deal and get my losses. It doesn't quite work like that. You really need to be materially participating in rental real estate activity. And usually that means owning a couple doors or a small portfolio yourself to really justify that 500 hours.
Hmm. So if someone's more of a passive investor, how would the tax codes change for them?
If you're a passive investor with a W-2, you're not really going to get many benefits. But if you're someone where all of your activities are passive, let's say you're retired or all you do is make passive investments, then all your income is passive and all your losses are going to be passive too. So your passive losses will offset your passive income. It's the kind of general thinking, you want everything to be active or everything to be passive, or you have certain passive investments that get offset by passive losses. One great thing I like to say is if you pair a debt fund investment, so long as they're doing it right and reporting it as line one ordinary income, which they should, then you can offset a lot of your income from a debt fund investment with an equity fund investment, because the debt fund will give you positive income. The equity fund will generally give you losses and depreciation, and you can kind of offset that to get to a net tax zero on your total passive investments by having your debt fund income, which is positive, be offset by your depreciation.
Awesome. And are there specific types of real estate investors that maybe don't necessarily, these laws don't apply, or, yeah, is there any loophole for that?
Yeah, the biggest loophole I'd say is the short-term rental loophole. That's
Hmm.
where the IRS says like, hey, you're not really, running an apartment. You're actually running a hotel, even if it's just like a single family Airbnb. And so what that does is allows you to not have to qualify as a real estate professional, um, to be able to unlock all the depreciation benefits of owning real estate by now operating like a hotel, motel, Airbnb. That's how you're able to take kind of an investment in real estate without having to meet the 750 hours. You still do have to materially participate in the short term rental. And generally, what people do is the safe harbor they go with for that one is working over 100 hours in your short term rental, and no one works more hours than you. That includes all the cleaners, That means you don't hire a property management company, at least for the first year when you're going to get a lot of these depreciation benefits. And so the short term rental loophole is a way to take advantage of these large cost segregation bonus depreciation deductions without having to go through the whole material participation real estate professional hoops.
Yeah, that's super interesting because I'm sure there's a lot of people that have just a few Airbnbs out there.
Yeah. Yeah, it's a great tax strategy, especially for people with like W-2s who don't have a larger real estate portfolio where they can qualify for the other great tax benefits.
Yeah, absolutely. So, thank you for sharing all of that. I think that is extremely helpful information. And before we begin to wrap up here, if someone wants to reach out, connect, and learn more about what you're up to and how to work with you, where can people find you and connect?
The best way would be to find me on LinkedIn. That's where I'm the most active. James Bohan, CPA MRED is my handle there. I'm building up my Instagram as well. That's James Bohan, CFO. And then people can visit my website to learn more about our services, www.stonehon.com. That's stone like a rock, Han like Han Solo. And that's the best way to get in touch with me.
Perfect. Well, I appreciate your time and your story. Thank you so much for being here.
Yeah, thanks for having me on, Michelle.
Of course. And for the listeners tuning in, if you got value, make sure you've subscribed. We've got more conversations with operators like James who are building real businesses. And we'll see you on our next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.